Hey guys and girls, it's Nathan here from the B.Invested headquarters, and today I want to talk about, I've got a lot of people coming in questioning how to protect your super fund during the GFD. As you know, 12 months ago, 18 months ago, I started talking about the concept of the liquidity coming out of the financial markets, us seeing volatility in financial markets, and what that means for investors and all different areas. And first and foremost, if we remember what happened back in the GFC, we saw a lot of things happen at the time. Predominantly, we saw institutions and corporations that did some bad things. They went bankrupt. Some collateral damage occurred to it, and we recovered pretty quickly from it due to the fact that we just printed more money. What we did see is we saw stocks, shares, bonds, everything drop in value, and a lot of super funds actually carry these things. And it's important to be aware of changes that are happening out there so you can actually prepare yourself accordingly to be protected and to be safe. And I should have done this in the start of the video, but I just want you guys also to know that I'm not a financial advisor to give you any sort of creditable advice on this topic because I'm just not a financial advisor. When we talk about super funds, you need to speak to someone that is a financial advisor. I don't trust many financial advisors out there, but if you do want to get in contact with a financial advisor that I trust personally, and I've known for the last 10, 11 years, and I knew through the GFC and have very, very similar sort of views on, you can send us an email, I can put you in contact with them. But with looking at super fund, I remember back in the GFC, people lost 40%, 50% of their super fund pretty much overnight. Just because they were, invested in the wrong things and had the wrong things that had gone by. The stock markets dropped by 40 to 50%. Financial markets globally dropped by 40 to 50%. A lot of super funds got wiped out during this period of time, and I think it's important that you are conscious of this because not many people look at their super and go, this is my super fund. I'm so proud of it. I'm so happy of it. It's just like, oh yeah, I've got a super. What is it? I don't know what it is, what's it at? I couldn't be able to tell you, I don't care. The reality of it is that, as humans, we're all stuck into this system, we all got to go work, we all got to go and earn income. You need to have something that's going to work for you as a backup plan. For me, I don't care about my super because I've made sure that I'm financially independent from early age, but even with your super, it's money that's yours that you've worked hard for, that gets put away by your boss to help you out in retirement. You want to make sure you're taking very good care of your super fund and that you're not letting people invest it in the wrong things and you have a level of control over it. Personally, I feel everyone should be their own financial advisor. They should have good in-depth knowledge as to what's happening out there in the finance markets and being able to make decisions accordingly to navigate through the changes in, obviously a recessionary time or a depressionary time, a liquidity crisis time, which is very much where we're heading at the moment. It was only the other week that I saw AMP shares here. Everyone thinks that shares in the Australian stock market pretty safe. One day I saw 25% wiped off AMP shares, and I think there was another couple of days where it lost about 5 or 10% each day as well. Imagine if that was in your super fund. Imagine if you had 50% of your super fund invested into that and you lost 35% of 50% of your super fund within 2 or 3 days. They are really, really real things that could happen. There's ways that you can protect yourself. As I was saying, I'm not a financial advisor. I can't give you advice through YouTube. I can't give you advice full stop when it comes to that. It's important to have someone there that can actually guide you through that. Some of the potentials that are out there, I've worked with a lot of people over the years that have had self-managed super funds, which ultimately means that you have a company type setup, which your financial advisor can tell you about, which is what I personally have as well, where you can control, you take your money out of the super fund, put it in there, and you can control assets within that entity for your financial future. There's one option. I have seen other people, that go in there, and I remember back when I worked in a job, I tweaked my risk rating as per the time that I was going through, whether I wanted to be in cash or whether I wanted to be in stocks, whether I wanted to be in shares, international funds, whatever. So yeah, it's important to be aware that there is inherent risks out there in the current marketplace. There is going to be lots of volatility out there in the marketplace, and this is a time where you're getting a bit of warning before we see some very strong volatility out there in the markets, to not just protect yourself, but to take advantage of the situation. Because I'd rather be a day too early, or a month too early, or 3 months too early than a minute too late, because after it's too late, you can't really do crap about it. So if you do want to speak to the financial advisor that I was talking about, the one that I trust, the one that I've worked with for over a decade through the GFC, that has very similar views on investing and the system and all that sort of stuff, feel free to email my office at admin@binvested.com.au, or give us a call, 1300 367 925, and we can put you in contact with someone, discuss what options you've got out there, and make a plan and a strategy to prepare yourself for the incoming imminent crisis that's ahead of us. We'll catch up soon, and I wish you all the best. Bye for now.